Welcome back. Something appeared in the data this week that almost nobody caught. While everyone watched the price chart, the Iran ceasefire, and the Senate calendar, Ripple quietly plugged XRP into the machinery that moves gold, silver, and crude oil. Not a pilot, infrastructure, through a decentralized exchange handling $1.74 billion in open positions. That is not an experiment. That is production scale. So let's break it all down. Here is what happened. Ripple owns Ripple Prime, an institutional brokerage they bought for $1.25 billion. Last week, Ripple Prime connected to a decentralized exchange called Hyperliquid. They added 3 products on day one: gold perpetuals, silver perpetuals, crude oil perpetuals. Big traders can now bet on commodity prices through a Ripple-owned brokerage on a blockchain-based exchange. Now, the sentence that matters. Ripple stated publicly they plan to migrate post-trade settlement of those commodity trades onto the XRP ledger. Every trade has 2 parts: the trade itself, buyer meets seller, and settlement, money moves, ownership transfers. Settlement is where the volume lives. Settlement is where the fees live. Ripple just said out loud they intend to run that settlement through XRP. Every gold, silver, or oil trade clearing through this system touches the ledger. That creates functional demand, not speculation, usage. For 7 years, the biggest criticism of XRP was one sentence: the company wins, the token waits. This is the first move that directly breaks that criticism. If commodity settlement runs on the ledger, the coin stops being a side character. It becomes the plumbing. The timing is not random. Days before this, Ripple held a conference in Tokyo on April 7th and 8th. In the room, SBI from Japan, Andreessen Horowitz, one of America's biggest venture firms, major Japanese banks. The theme was not payments. The theme was real-world asset tokenization and capital markets infrastructure. At that same conference, SBI Ripple Asia confirmed they completed a token issuance platform on the XRP ledger. A financial institution can now issue a real-world asset, a bond, a fund share, a commodity claim, directly onto the ledger as a token. Put the pieces together. Token issuance platform is live. Commodity trading venue is plugged in. Settlement is migrating to the ledger, not 3 announcements. One architecture being built in public while the community argues price predictions on social media. Here's where it gets technical, and this separates informed investors from everyone else. Let me walk you through what actually showed up on-chain and in the flow data this week. 3 data points, each one interesting alone. Together, they tell a specific story. Data point 1, whale accumulation. CryptoQuant released its large wallet read on April 6th. Whale accumulation is at a 10-month high. Addresses holding over 1 million XRP are adding 11 million XRP per day on a 30-day average. Roughly $15 million absorbed by big players every single day. Not flipped, absorbed. Data point 2, exchange reserves. In the same window, 442 million XRP left exchanges. Coins leaving exchanges cannot be sold. The order book thins. Every dollar of buying pressure moves the price further. This setup historically precedes sharp rallies. Data point 3, fund flows. CoinShares reported $119.6 million into XRP investment products globally last week, largest weekly figure since December, more than Bitcoin, Solana, and every other crypto asset combined. Over half of all crypto fund inflows for the week went into XRP alone. If you take nothing else from the last 5 minutes, remember this: whales are loading, coins are leaving exchanges, and global funds are buying XRP faster than anything else in the entire asset class. Now, I could end the video here and you'd leave feeling great, but that's not what this channel does. Now, if I stopped here, you'd think this is all green lights. It's not. Inside that 119 million number is an uncomfortable breakdown. 70% came from Switzerland alone, not continental Europe, Switzerland. Of the remaining 30%, most came from Germany and Canada. The 5-spot XRP exchange-traded funds in the United States, the product supposed to carry American institutional demand, recorded near-zero flows across the entire week. Total assets under management in those 5 American products sits at $968 million. That number has barely moved in 6 weeks. Inside the American ETFs, 84% of assets are held by retail, regular people. Only 15.9% is institutional. A Coinbase and EY Parthenon survey of 351 institutional investors found 25% plan to add XRP in 2026. 65% said regulatory clarity is the one thing holding them back. 25% want to buy, 65% are waiting on a law. That is the shape of American institutional hesitation in one sentence. European capital is voting with its money. American capital is voting with its lawyers. Record European flows happened with zero meaningful U.S. participation. That is both a gift and a warning. If European flows alone produce a record week, imagine what happens when American money unlocks. American money does not unlock until Washington moves. This is the part of the video where I lose the people who only want hopium. But you're still here, so let's go. The reason XRP isn't at $3 right now has nothing to do with Ripple, nothing to do with the SEC, and everything to do with one force eating every bullish catalyst for 6 straight months: macro. Right now, that macro is trapped between 2 rare forces pulling in opposite directions. Pay attention to these next 3 data points, they explain the setup. First, the Federal Reserve. The Fed raised its 2026 inflation forecast from 2.4% to 2.7%. Every rate cut priced into this year has been priced out. The market was betting on 3 cuts at the start of the year. It is now betting on 0. 0 cuts means the 10-year Treasury keeps paying 4.5% risk-free to anyone holding it. When a U.S. Treasury pays 4.5% with no risk, institutional capital parks in bonds. That is the gravitational force pulling on every risk asset in the world right now. Second, oil. The Strait of Hormuz was closed in late February. Oil spiked above $100. That is the fastest way to force inflation higher in America because oil touches everything: transportation, fertilizer, manufacturing, shipping. For 6 weeks, oil was the reason the Fed could not move. Last week, Trump brokered a 2-week ceasefire with Iran. Pakistan helped. Iran agreed to open the strait. Crude dropped from $113 to below $95 in days. The energy short squeeze triggered $196.7 million in crypto short liquidations as a side effect. Third, the geopolitical fuse. The ceasefire is 2 weeks, not 2 months, 2 weeks. After that window, it becomes a real deal or the bombing restarts. If it holds, oil stays low, inflation cools, the Fed can signal cuts, and XRP has a tailwind it has not had all year. If it breaks, every number I just walked through reverses inside 48 hours. Zoom out. A Japanese bank is live testing token issuance on the XRP ledger. A Ripple-owned brokerage is moving commodity settlement onto the ledger. 10-month high whale accumulation, record European inflows. Treasury Secretary Bessent publicly backed the Clarity Act on April 9th. Garlinghouse called it a historical milestone. All of this is real, and yet XRP is trading at $1.35. Fundamentals set the destination. Macro sets the timing. Now, I know some people won't want to hear this, but I didn't build this channel on telling people what they want to hear. The second honest turn is about the chart itself, not the news, not the whales. The chart. Since late March, XRP tried to break above $1.35 3 separate times. It failed 3 times. Each rejection sent it back to $1.28. That level has become the floor of a very tight compression. Every test holds. But a floor tested 4 times in 6 weeks is not strong. It is eroding. Above the price is a wall nobody wants to talk about. Roughly 60% of all circulating XRP was bought around $1.45. 60%. Tens of millions of holders sit underwater waiting for price to return so they can break even and sell. Every run-up to $1.45 meets a wall of people saying, "Thank you, I am out. Here are the walls." And behind each one is a crowd waiting to sell. First wall, $1.38. The SAR level, a technical indicator holding price down since late March. A daily close above flips the trend bullish for the first time in weeks. First gate. Second wall, $1.45. The structural ceiling, 60% of supply has its cost basis here. Breaking it requires volume plus macro cooperation. A holding ceasefire, a shift in rate cut expectations. Without those, every rally dies at this line. Third wall, $1.60. If 45 breaks, the path to 60 is open. Very little supply was accumulated in that range, more psychological than structural. Break 45, and the market starts talking about $2 again, now the escrow math. Every month, Ripple releases 1 billion XRP out of escrow. The company relocks roughly 800 million. Net supply entering the market is about 200 million XRP per month. Against 11 million per day, absorbed by whales, roughly 330 million per month, the math now works in favor of tightening. Whale demand slightly outpaces escrow releases for the first time in months. Combined with 442 million XRP that left exchanges in the last 30 days, supply is tightening, not loosening. Not enough alone, but a real structural shift. That's the full picture. Bull and bear. Now let me give you the playbook. I've given you the problem. Now let me give you the solution. 4 signals, 4 specific things to watch between now and the end of April. If all 4 line up, the trend breaks. If 1 or 2 fall, you get a drift. If none land, we retest $1.28 and probably lose it. Signal 1, the Senate. The Banking Committee returns from recess tomorrow, April 13th. Watch for a markup announcement, not a vote, a scheduled markup. If Senator Scott schedules a markup for late April before April 30th, poly-market odds on clarity passing jump from 72% to 90%. That is the trigger. Watch the Hill and Punchbowl News for the exact schedule. Signal 2, the Federal Reserve. FOMC meeting on April 28th and 29th. Nobody expects a cut. Watch the dot plot and the language. If Powell uses patient less and gradual more, that is dovish. If the dot plot shows even 1 cut before year-end, that is a green light for every risk asset, XRP included. Signal 3, the price level, a daily close above $1.45, not a wick, not an hourly spike. A clean daily close above the level where 60% of supply sits. That is the wall giving way, the single most important technical level on this chart. Signal 4, oil and the ceasefire. Watch West Texas Intermediate. If crude stays below $95 through the end of the 2-week window, the ceasefire is real. If it spikes back above 105, the deal has broken. Oil is the fastest early indicator of whether this macro window stays open or slams shut. The bull case attached to these signals. If 3 of the 4 land, a markup schedule, a dovish Fed, a clean break of 145, or a holding ceasefire, Standard Chartered's $2.80 target for 2026 comes back into play. Jeff Kendrick, their lead digital assets analyst, kept that number on the board through the entire drawdown. The bear case. If the ceasefire collapses, if the markup gets pushed into May, and if the Fed signals 0 cuts this year, $1.28 breaks. Next level down is 115. Below 115, no technical support until 85 cents. That is the honest downside. You don't need to guess, you just need to watch these signals. So let me bring this all together. Ripple is no longer a payments company competing with SWIFT. The Hyperliquid integration, the Tokyo conference, the SBI token platform, together they build Ripple into the institutional plumbing for real-world asset settlement, commodities, tokenized funds, corporate treasury. XRP is stopping being a token chasing a use case. It is becoming the use case, but macro is the lid on the pot. Until the Senate moves, until the Fed blinks, Until the ceasefire holds, every fundamental gets swallowed by a risk-free treasury yielding 4.5%. I'll be covering every development, the markup, the FOMC meeting, the ceasefire, every Ripple product launch, every single day on this channel. Tomorrow, the Senate Banking Committee returns from recess. I'll have the first read on whether Scott schedules a markup this week. I'll have the numbers. I'll have the breakdown. Don't miss it. The next move starts with one of those 4 signals. Watch them like a hawk. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed,